Hi you guys, welcome back to the channel. My name is Brad. This is the Firefighters Financial Toolbox. I get a lot of questions about REITs. And if you don't know what a REIT is a real estate investment trust. Basically, it's a stock that buys properties or controls properties, and then it pays dividends to its shareholders. It's a little bit more complicated than that, but it's an easy way to buy real estate without having to have the headaches of being a landlord or actually having the money to come up with to buy property. So I've had a lot of people asking me about my REITs and if I think they're a good investment now. You guys, first of all, don't take this as investment advice. This is my opinion, and this is what works for me. What works for you might be completely different. But I thought I'd take advantage of this possibly last beautiful day here in Oregon and talk to you about my REITs. And I thought I would look and go into my computer and see how they've performed so far this year. Now, full disclosure, my REITs make up about 3% of my stock holdings, you guys, so it's a pretty small portion. My biggest REIT is the Vanguard Real Estate Index Fund. That's ticker VGSLX, and that's about $22,000. So we're going to look at how that one's done, and we're going to look at the 4 individual REITs that I hold. I hold AGNC Corporation, which is a mortgage-backed REITs. Okay, so they buy mortgages for companies that own property. We'll talk about that one. Next one is Public Storage. Everybody knows the name Public Storage, right? Because they're in almost every town. We Americans collect a lot of stuff, and when we run out of room to put it, we need some place to store it. So that's why I own Public Storage. Third company we're going to talk about is CCI. That's Crown Castle International. And this is a company that, as opposed to holding buildings, they actually own cell towers and all the stuff involved with internet, cable, cell phones. So they're going to be a big market in the upcoming 5G as they start expanding that out. This is going to be a very good REIT, I think, to hold. The last one we're going to talk about is the one that I get the most questions about because it's the most known one out there, and that's Realty Income. And Realty Income is my biggest single stock REIT holding. That being said, it's very small. You guys, we're going to talk about how Realty Income has done so far this year and whether I think it's a good idea. So we're going to go into the computer now and we're going to take a look. Okay, you guys, here we are in Market Watch on my computer, and we're going to take a look at all the funds and stocks that I have in my REIT portfolio. First, we're going to look at the Vanguard Real Estate Index Fund. That's ticker symbol VGSLX. The ETF equivalent for this, you guys, would be VNQ. And you see that it's currently trading for just under $114 a share. If we take a look at the 1 year, let's look at the year to date. So year to date, you can see that the high back in, it looks like late February was about $141.10. It's currently trading, lastly, like I say, just $113.87. So definitely down for the year. If we take a look at how it's done year to date, we're actually down almost 11.25%. Looking at the 52-week high was 141, and the 52-week low was $80.80. So we are rebounding a little bit from the low, but we're certainly not back up to its high. Now, as I said, I hold this one in my Roth, and it is definitely down this year. One good thing about this and most Vanguard funds is the expense ratio to hold this is nice and low at 12 basis points. But it is definitely down. Now let's take a look at my individual stocks. We'll start with AGNC. And you can see here that on AGNC Corp, let's take a look at the year to date. There we go. We can see that we had a high back again, same time frame, right? Late February of about $19.62 a share. And right now we're at about $14.20. So we're down over $5 a share from its high point. Year to date, we're actually down almost 19.75%. You guys, this one's been going down. Now this is a monthly REIT pair, and as I said before, it's a mortgage REIT. I got into it before I totally understand that, and I I've been skeptical. I thought that it would come back a little faster than it has. I did buy the price down a little bit, so my shares aren't, I'm not down quite that much, but they did cut their dividend a little bit earlier in the year. It has started coming back a little bit, but certainly not one of my high performers as far as that goes. If we take a look at Realty Income, that's ticker symbol O. This is the one everybody loves. This is like the most popular REIT. Now, Realty Income, again, is another monthly payer. But as with most all real estate this year, if we take year to date, we can see that once again, the high was back towards the end of February, first part of March, and we had about 82.44 a share. And actually, it looks like 84.92 was the high of the 52-week. And it got down as low as $38 per share. So right now, we're sitting at about 60.75. So we've certainly come back most of what we've lost. But overall, year to date, we are actually down about 17.5%, 17.49%. Now, as I said before, this has a lot of good companies. It has Dollar General. It's got some Walgreens. It's got some Home Depots. It's got lots of 7-Elevens. You guys, these are a lot of companies that people are going to go to even during the pandemic. Yes, REITs as a rule have taken a bath this year. They're definitely down in price, but I think this is one that I am actually bullish on coming back. I think this will recover. It may not happen this year. It may take a year or so for it to get back, but we're still getting, and it's still, remember, Realty Income is the only REIT I hold that is a dividend aristocrat. They've been raising that dividend for over 25 years, you guys, so that's important to them. And I feel with that in mind, this is a good, sound company still. Even though it is down quite a bit this year, I feel like this is one that's going to turn around. Next one we're going to look at is Public Storage. That's ticker symbol PSA. And we see that it's trading at about $235, almost $236. If we look at year to date, we see that it dropped, but it's pretty much back to where it started, you guys. Year to date, it's actually up 10.69%. So you see that that's going from the beginning of the year. Now it's high for the 52 week was $240.29, and right now we're at $235.72. So we're not quite back to the high that we had towards the end of February, first part of March. But we're certainly way above the March low of $155. So this is one that's come back, and as actually year to date is up, you guys. So because it's almost back to its high, I'm going to slowly add a little bit of this, but not a lot, because again, I like to buy when it's on sale if I can. All right, last one we're going to look at is Crown Castle International. As I said, these guys, their REITs are controlling cell towers, so with the 5G coming on, they're going to be a big force in that market. And as they add more towers to get more 5G coverage, I feel like this is one that's going to do well. And as you can see, year to date, it's actually up 11.48, so almost 11.5%. Currently, it's trading at about 158.47. If we look at the 52-week range, we had a low at the March 23rd drop of 114.18, and the high was 180. So we're not quite up to highs for the year, but we are in there. This is another one that I feel like I want to keep adding to, although I would love to see a little pullback so I could buy some more. I'm going to slowly add to it because, you guys, you can't time the market. And unfortunately, right now, because I hold all these REITs in my Roths, I have to wait until next year before I can buy some more. All right, you guys, so that was a wrap on how you can see as a whole, 2020 has not been great as far as stock prices go for real estate. It's pretty much taken a bath. But I feel that in the long run, and remember, I'm a buy and hold investor, so I don't invest for this year. I invest for 25 years or more, right? Everything I think of long term. So I think that all of these are going to recover. Now, I don't know what kind of time frame that's going to be. I wouldn't pretend to try to know. I'm just going to keep investing the money as I get it and build up those amounts so that when I retire, I can get dividends. Remember, I hold all mine in my Roth, This is very important that you hold it in some kind of tax protected account, either tax deferred or tax free. I choose to put it in my Roth because then I'm not taxed for the REITs. Remember, REIT dividends are always taxed as ordinary income. They don't get special treatment. So that's something you need to consider if you're thinking about adding them to your portfolio. Doesn't mean you can't hold them in taxable. You certainly can. Remember, they're going to be taxed as ordinary dividends. They are never qualified, so they're going to be taxed at ordinary income. All right, you guys, I hope you got something out of this. If you did, do me a favor, drop me a like. And if you're not already subscribed, you know the deal. Hit the red button, ring the bell. All right, thanks a lot. We'll see you.